It's Tuesday and U.S. markets are back up. The Dow and NASDAQ hit new intraday highs. So joining me to weigh in on the action is Alan Valdes of SilverBear Capital. Alan, great to have you on the show today.
Rami, thanks for having me as always.
Well, here we are on a Tuesday and we're seeing the markets back up. Now, it's been a rocky ride since President Donald Trump took office down in D.C. We've been seeing all sorts of trading action for all the markets. So what do you make of today's gains?
Well, it's buy the Trump dip. I tell you, that's it. This volatility we're seeing today, we've been seeing since he's got elected, essentially, is going to stay with us. He tweets things that can move markets instantly. And every time he does something like that, the repercussions can be, for traders, enormous. And we're seeing it. I think as he gets more into his administration, as time goes by, you'll see less of these moving tweets because they do affect the market big time. So I think we'll see that. And we'll get back to what we do, business, earnings. Earnings, we had a slew of earnings today, of which some of them were great. And we had General Motors, Disney, Boeing. So right across the board, we had good earnings today, basically.
And Alan, it's almost easy to forget that it's earnings season since we have so many other headlines that we need to pay attention to. And speaking of headlines, we did get a statement out from the Philly Fed President, Harker, saying that an interest rate hike in March is not necessarily out of the cards. But what do you think the Fed is going to do since we didn't get a statement after the last announcement?
That's a good question, and that's what's on everyone's mind, because if you look at the numbers, that jobs number last week was great, 270,000. That blew it right out of the ballpark. Job openings were down today, but that shows people are working. They're back working. So overall, it's the right time to raise rates. I wouldn't be surprised to see them raise rates. I think what they might do, though, is wait for the Trump financial plan, see what he's going to do with that. And he hasn't really decided on the tax cuts and things like that. We're still waiting on that. So I think once that gets clarified, but March is right around the bend, so we'll have to wait and see. But I could see them raising if we get a little more clarification from the White House on his financial plan.
And Alan, indeed, we are waiting for more clarification in terms of policy and what spending is going to happen and what tax cuts will be in place. But at the same time, we're also paying attention to what's happening in the Eurozone. Now, we have several national elections coming up, and the implications could be riveting, especially in France. So how are you positioning yourself for the risks that are on the horizon?
We're watching that ever so closely because, like you mentioned, right now Le Pen's leading in France, and now a poll out of Germany has Merkel coming in second in the election. Italy, we know what happened to Russo, so that's changing down there. So if France, for whatever reason, and it's a wild card guess, decides to leave the euro, that's it. The Eurozone's dead. They can't do it alone just with Germany. It would be a game changer. It really would be a game changer. But at the same time, one of the things that made America a superpower was after World War II, Europe was in shambles. We were so stable. So that could happen again. Not that they'll be in shambles like after World War II, but financially, it'll be everyone man for himself over there. So you could see a lot of money coming into not only the 10-year, but into U.S. equities. So it could be a bonanza for American equities, except the dollar could go so high that could weigh on the multinationals. But we'll have to wait and see.
Well, indeed, we will have to wait and see. So thank you so much for joining me on this Tuesday. And as always, thanks for your insight, Alan.
Rami, thanks for having me.